How to analyze a property for investment potential. What if I told you that the property you're eyeing right now could either be your ticket to financial freedom or your biggest regret? In the next 10 minutes, you'll learn how to analyze any property to make sure you're investing smart. So, if you want to live that wealthy lifestyle you dream of, this is the video you need to watch. But let me warn you, it's not going to be easy. Because the truth is, most people get this wrong. Big time. Stay with me to the end, and I'll share a game-changing tip that could make or break your next investment. 1. The problem. Why most investors fail. Here's the problem. Most new investors dive into properties head first, all excited, without truly understanding what they're getting into. They see the flashy house, the potential, and think it's an easy win. But here's the cold truth. The majority of people who fail in real estate, it's because they skipped the analysis. They didn't take the time to truly understand the numbers, the risks, or even the location. Imagine this. You buy a property you're in love with, only to realize the area has poor rental demand, maintenance costs are sky high, and you're losing money every month. Sounds like a nightmare, right? But that nightmare is real for thousands of investors who didn't take the time to properly analyze their investment first. I know, it's tempting to get swept away by a pretty house with a nice yard, but trust me, that yard won't look as nice when you're handing over your bank account to fix the plumbing. So, let's fix that. In the next few minutes, I'll show you how to avoid these mistakes by breaking down the core elements you must analyze before pulling the trigger on any property. And don't worry, we're going to make it simple. 2. The solution. Key steps to analyzing a property. The first thing you need to analyze is, drum roll please, location. Yes, location, location, location. I know, it's cliché, but it's not just about proximity to the best coffee shops or trendy neighborhoods. It's about the long-term viability of the area as an investment. Take a second to think about it. Will the property be in demand 5 or 10 years from now? Is the area improving or deteriorating? Look for signs of growth, new businesses, development projects, and good schools. These are all indicators that a location will likely increase in value. Unless you're planning to buy a haunted mansion in the middle of nowhere, the location matters. Even ghosts prefer good real estate, okay? Now, let's talk about numbers, because at the end of the day, that's what's going to decide if you're making money or losing it. You can't ignore the financial side of things, and here's how you do it. Step 2. The numbers. This is where your financial savvy comes into play. You have to calculate the cash flow. Basically, how much money you'll make each month after all expenses. Start by calculating the monthly rent you can charge. Then, subtract all your expenses. Mortgage, insurance, taxes, maintenance costs, property management fees, and unexpected repairs. Trust me, there will be unexpected repairs. What you're left with is your net operating income. If that number is positive, great. But if it's negative, you might want to reconsider. The key here is understanding whether the property will pay for itself, and then some. Because if your property is draining your bank account every month, you're not investing. You're just paying for an expensive hobby. You wouldn't buy a car that runs on empty every day, right? Well, don't buy a property that does the same. Now, let's move to something that could make or break your investment. Condition of the property. Step 3. Property condition. This one's huge. Some investors see a fixer-upper and think they've just found the bargain of the century. But have you ever watched one of those renovation shows on TV? Things never go as planned. Before you get too excited about a cheap price, make sure you understand the condition of the property. Look for red flags, foundation issues, roof problems, electrical or plumbing issues. These can be huge money pits. And remember, The cost of fixing these issues often outweighs the price of the house itself. Unless you've got a magic wand, fixing these problems is not going to be as easy as flipping a light switch. And trust me, your bank account will be wishing for one. The next critical step? Understanding the local market trends. This one is a little tricky, but if you miss this, you might find yourself in a sinking ship. 3. The stakes. Why this matters. Step 4. Market trends. You can't just look at today's market. You need to think ahead. Is the market on the rise or about to plateau? The right property in the wrong market can be disastrous. I want you to imagine, you've invested in a property in an area where prices are dropping. How are you going to sell or rent that property for a profit? It won't be easy. Check the local market trends. Are home prices increasing? Is there growing demand for rentals? You want to be ahead of the curve, not stuck in a declining market. But here's the kicker. Even if the market is strong today, the future of the property is what counts. And there's one factor you need to consider. Stay tuned. I'll give you that crucial little-known tip in just a second that could save you hundreds of thousands of dollars. But first, you've made it this far, and you now know how to analyze a property for investment potential like a pro. But here's the catch. You have to take action. So, don't let this knowledge sit idle. If you found this video valuable, hit the like button, subscribe for more insider tips, and drop your questions in the comments below. What's the next property you're analyzing? And now, as promised, the tip that will change the game for you. But that's a story for another video. Stay tuned.